Are we on the cusp of a relentless stock market surge, or is a recession around the corner? Today, we dissect Jason Shapiro's bullish stance on an unstoppable market rally and Eric Bosman's warning signs from the housing market. These expert insights will leave you questioning your investment strategies. Don't miss out. Your financial future could depend on it. Like and subscribe for more critical financial updates. Today, on Financial Analysis in Review, we will summarize the following videos. From Crowded Market Report by Jason Shapiro, we have The Market Doesn't Go Down Just Because You Need It to. From Eurodollar University, we have Recession Warning Signs You Need to Be Watching, EPB Search. Welcome to the Crowded Market Report, your go-to source for insightful and often provocative market commentary by Jason Shapiro. Today's video brings us a unique perspective on the unstoppable momentum of the stock market as we dive into why it seems to keep climbing against various economic backdrops. The core thesis of Jason Shapiro's video is that the stock market continues to rise irrespective of economic indicators or interest rate changes, largely driven by market psychology and investor sentiment. Shapiro argues that being bearish in an upward trending market is fundamentally flawed and often leads to poor trading outcomes. Here are the key points discussed by Jason Shapiro. Market behavior. Shapiro explains that the stock market goes up across various economic conditions, whether interest rates rise, fall, or stay the same. He criticizes perma-bears who become more bearish as the market climbs and labels this as misguided thinking that doesn't align with actual market trends. Current market status. He notes that the stock market is at or near all-time highs and argues that shorting an all-time high market is counterproductive. Shapiro dismisses the idea that we will see a 2% down day or even a 10% pullback this year, countering it with his own bullish stance until at least Election Day. Cognitive bias. Jason delves into how other traders' flawed logic of thinking markets will decline simply because they need them to leads to suboptimal trading strategies. He shares anecdotal experiences, including other traders' illogical reasoning behind shorting stocks like Nvidia with expectations of a 70% drop. Other markets. Shapiro briefly covers the bond market and the performance of the Canadian dollar, noting that these markets can exhibit counterintuitive movements relative to economic numbers. He mentions the performance of gold, silver, and copper, touching upon their reaction to the dollar's movements, yet emphasizes they do not significantly alter his bullish stock market perspective. Jason Shapiro made the following predictions: continued market rally. Shapiro forecasts that the stock market will continue its upward trajectory at least until Election Day, dismissing the likelihood of significant pullbacks. Market breadth improvement. He predicts that the market breadth, currently a concern for some traders, will eventually improve, further fueling bullish sentiment. Jason Shapiro concludes by reinforcing his key message: don't short a market that is climbing to all-time highs. He urges traders to be bullish on rising markets and bearish on declining ones. Shapiro also advises viewers to check out the Crowded Market Report and its free Substack for more market insights and to enjoy their upcoming July 4th holiday. His call to action is for traders to align themselves with the prevailing market trend rather than fighting against it. Is the U.S. heading for recession? That's the burning question on everyone's mind, especially in today's volatile economic climate. To help us unravel the clues, our host is joined by Eric Bosman of EPB Macro Research. The core thesis of the video centers around using the housing market, especially its downstream impact on jobs, to gauge the likelihood of an impending recession in the U.S. Eric Bosman emphasizes a data-driven framework to analyze the business cycle, breaking down aggregate economic activity into components that can be tracked to foresee recessionary trends. Here are the key points discussed by Eric Bosman. Understanding aggregate economic activity. Aggregate economic activity is made up of non-farm payroll employment, employment level, real personal consumption, real personal income, real manufacturing trade and sales, and industrial production. Each of these indicators is equally important and interrelated, forming a composite that provides an objective reading of the U.S. economy. Four Economies Framework Leading Economy represents the availability of money and credit, which originates the cycle. Cyclical economy includes residential construction, manufacturing activity, and consumption of durable goods. Aggregate economy, a broad measure of income, consumption, production, and employment. Lagging economy encompasses sectors like healthcare, government spending, and non-residential construction, which are less indicative of upcoming economic trends. Historical examples. Residential and non-residential construction sectors experience differences in the timing and impact of recession during the 2007 to 2009 period. Current economic indicators. The cyclical economy fell abruptly from high growth rates to zero around December 2022, followed by a prolonged period of stall, indicating uncertainty in its direction. Leading indicators have not shown significant improvement, suggesting ongoing economic challenges. Eric Bosman made the following predictions. Continued economic uncertainty. The cyclical economy's stall is likely to resolve to the downside, as leading indicators haven't started to improve. Global synchronicity in recession. The cyclical downturn is not just a U.S. phenomenon. Europe and Japan are experiencing recessions, highlighting the interconnectedness of global markets. Eric Bosman concludes that understanding the various components of the economy and their interdependencies is crucial for anticipating recessions. He reiterates the importance of focusing on the cyclical economy, especially residential and manufacturing sectors, to get an accurate sense of where the overall economy is heading. As always, a data-driven approach is essential. In today's compelling discussion, Jason Shapiro firmly believes in the unstoppable rise of the stock market, driven by investor sentiment irrespective of economic indicators. On the flip side, Eric Bosman warns of an impending recession, using the housing market as a key predictor. Both experts stress a data-driven approach, but differ on market outlook. Shapiro argues against shorting the market at all-time highs, while Bosman points to stalling economic trends. Stay with us on Crowded Market Report for more insights on these contrasting views and the future of your investments. Thanks for watching Financial Analysis in Review for July 3rd, 2024. If you'd like more time-saving content, please remember to like and subscribe. If you have ideas for more channels you'd like to see summarized, drop a comment below. See you next time.